Awesome. I think we'll get into it, guys. Welcome, everyone. Welcome to today's webinar, which is around Xero Payroll, sort of an overview for beginners. Thank you to those who have joined us. My name's Lucy Weston. I'm the Marketing Manager here at Maisey Co, and I'll be moderating the webinar today. So just before we get into it, just quickly, in case this is or your first webinar or you're sort of quite new to the environment, I just want to assure you that you are automatically muted. You have the control panel sitting along the bottom of your screen. There is a Q&A button there. So we welcome, we actually encourage you to submit questions. You can do that throughout the webinar, and then we're going to come back to them at the end. You know, if chances are, if you're thinking that question, someone else will be too. So there's no silly questions. So please, this is your opportunity. So fire them through. If you do need to leave the meeting, there's the button at the right-hand side there. Just quickly, I know a number of you are new to Maisey Co or not our clients, so I thought I'd just give you a quick intro. So we are Maisey Co. We are chartered accountants and business facilitators and enablers. We have offices in both Hamilton and Tauranga. And we are Xero Platinum partners. Nathan Maisey and Peter Harris, who you can see in the picture at the bottom there, they chose early on to adopt Xero. We think it's the latest and greatest. We use Xero 100% with our clients, which means when you sign up with Maisey Harris, you also sign up with Xero. We get you set up, we get you trained to use it, and we'll help support you ongoing there as well. In the last couple of years, we've also been very lucky to be recognised by Xero. We've won a couple of awards. In 2018, we won the Xero Accounting Partner of the Year award for New Zealand, and last year took out the first ever People's Choice. So yeah, we do a lot of work within Xero, and yeah, that's why we're sort of bringing you this webinar today. So thank you for joining us. Now, I'm going to hand over to Rory McKenzie, who is a chartered accountant and Xero expert trainer at Maisey Co. But just before I do, just a couple more points. We have sent around these PowerPoint slides prior to the webinar, and we are recording this, so I'll be sending that after as well. But we do encourage you to grab a pen and paper and take notes as you go through, because Rory's going to go through a couple of slides, but then he's going to jump into Xero and show you in real time. So yeah, take lots of notes, ask lots of questions via that Q&A button, and that'll be awesome. And then just very quickly, lastly, I'll also be sending around a short survey after this webinar, and we really encourage you to fill that out. It really helps us to understand how these training webinars are landing, and to ensure that we can help support you going forward as well. So yeah, that would be really helpful if you can fill that out. It should only take about 2 minutes. Anyway, I'll stop my rambling and hand over to Rory. Thanks.
Thanks, Lucy. Now, what do I need to do? Okay, so what's on the agenda for today? So we're going to go through a fairly sort of high-level overview of what Xero Payroll is, and then I'm going to take you through setting up new employees, processing leave requests, entering timesheets, completing a pay run, and then what you need to do to satisfy the IRD with your PAYE obligations, and how Xero helps you do that with the payday filing system. So what is Xero Payroll? So Xero Payroll is essentially your payroll system, and it helps you stay compliant. It calculates all your taxes, so PAYE, KiwiSaver, student loan, takes care of any other deductions that you might have for people, like fines or child support, that sort of stuff. Tracks all the holiday pay, the annual leave, and your sick leave. So all of that stuff is dealt with. You don't have to muck around with complex calculations. Sorry. It creates and files the PAYE returns with the IRD and makes that very simple. There's an app that all your employees can use to look at their balances, see their pay slips. They can complete leave requests, and they can also do their own timesheets in the app, and that's called Xero Me. And the cost for the Xero Payroll add-on is $10 per month. and you get one employee included there, and they do charge you an extra $1 per month for each additional employee. And it's pretty much the cheapest option on the market, so it's a flat monthly fee. Most other providers are charging you per pay run instead. Okay, so what I'll do now is I'm going to flick over to Xero and take you through what this all looks like and how it works, okay? Okay, so I'm in the demo company here. So everyone who's using Xero has access to a demo company. All you need to do is come over the side here and you should be able to either hit change organization and you'll have a demo company option, or you can search in this box here for a demo company and it will show up for you. What you can do is you can jump in, you can play around with the payroll system. You can practice adding employees, you can practice going through the motions, you can sort of figure out, you know, what you can and potentially can't do inside the payroll system without it affecting your real-time information. So when you get payroll activated on your Xero account, you get this new menu. So under payroll, okay, you've got a payroll overview. And this is really just a dashboard type page. So once we go, there we go. And so basically it's telling you a few little points of data here, when your next payment is due, you know, what pay runs have you run lately, what leave requests have been applied for, and you've got a little calendar sort of telling you when you've got pay runs to run, okay, with the blue dots, and then holidays are noted there as well. Obviously we can scroll through as we go. From here you can do new tasks, so you can do a pay run, you can add an employee, or you can add a leave request. Outside of that, you've got your menu here. So under your menu, and what we'll do is we'll jump into our employee section to start with, and we'll run through how we create an employee. So there's two types of employees that Xero can deal with. So there's your regular, you know, permanent people, casual people, salary, wages, whatever it may be. They all come under employee roles, and then it will also deal with your contractors. So if you've got people that are invoicing you and you have to take out the withholding tax and pass it on, then it will deal with that as well. So what I'll do first is we'll go through adding an employee, and then we'll jump through and show you the difference between an employee and a contractor. So to add an employee, all we need to do here is click add. Now there is an option if you are converting from an existing software where you can upload those employees in bulk. But for this example, we'll just add a new employee. Okay, so it starts off where essentially all we need to do is enter in some basic information here. Now there's a few fields here that are required. So I'll note those as we go through. So date of birth is required, okay? Something like that. Tick the boxes, enter our name. You can add a job title if you need to, but that one is optional. Phone number is always good to have in there. And same with the email address. So the email address is going to be necessary if you want to give them access to the Xero Me app so that they can see all their own pay slips and do their timesheets and things. Address is a required field, so we do need to add that one in. But only the three fields are required. You don't need to enter the suburb if you don't want to. Emergency contact, so all optional, but it's one of those things just in case, you know, something happens, you've got their partner's details or their child's details to get in touch with their family if something does happen. So once we've filled that in, all we need to do is click save. And so that's obviously fairly straightforward. It's all just standard contact information, and you should have that via their application forms or their contract and that sort of thing. From there, we're just going to work through the tabs along the top here now. So we just move over to the employment tab. And so what we're going to do here is we are going to add in our start date. Okay. So for us, we will put that in as today. Our pay calendar. So when we add payroll initially, there's some settings in the background that we jump in and set up for you. And one of those is deciding how often you're going to pay your employees. So you can do that weekly, fortnightly, or monthly. And so for this instance, we're going to sit with weekly. Now, our holiday group. So our next option is holiday. So what we need to do here is, depending on which region you live in and which anniversary day you sort of fall in under. So I'm in Hamilton, so we come under Auckland Anniversary Day. So we're going to pick that, and it's going to make sure that that day is passed on as a stat day. The employee groups is for if you've got tracking categories set up or divisions set up in Xero. So you can either do it based on time or you can do it based on the employee. So if you've got two different locations where you operate out of, you can then say, hey, this employee only works at that one. Or if they fluctuate between the two, then you can do it in a timesheet instead. From there, we are just going to add in our salary and wages. So we start off with our type. So are we on a salary or are we just ordinary wages time? So then again, are we calculating it based on an annual salary or an hourly rate? What's our hourly rate? How many days a week are we working? And how many hours are we working per day? Now this here is really important, okay? So this is what the payroll system is going to use to calculate an annual leave entitlement. So if you put in that they are working 5 days a week, 8 hours a day, then they're going to get 4 weeks at 40 hours a week of holiday entitlement each year. And when they work more or less, Xero will accommodate that in the calculations, but just as a base, it's great to get that right. Now, one thing to note here is if you do have casual workers who aren't permanent employees and they don't get annual leave, they get paid their holiday pay as they go, then you're going to want to set these as 0 and 0, because otherwise Xero in the background is going to accrue their annual leave if you've got numbers in here, which they don't actually get. So that's just one thing to be wary of when you're setting up a casual worker. But for your permanent team, your 5 days a week and your 8 hours a day is fine. Once we've done that, we do need to click save here, otherwise we're going to lose everything that we've done, okay? So that's just a little trick where you come out of adding the salary and wages, you click OK, and then you move on, but it really needs you to click save again down here. Okay, so our next tab is our taxes tab. So this is where we are coming in with our IRD number. We should then have our tax code declaration form, IR 330, from our new employee, telling us what their tax code is. Our super contribution rate, so this depends on the level of their annual earnings, okay? So if they are under about 54, you're looking at 17.5. If they're over that, you are looking at one of these higher rates, okay? So it just depends on where they sit. So for $20 an hour, I would assume that I'm sitting under that $54,000 mark. Next here, are we eligible for KiwiSaver? So that is not, are they in it? Do they want to be in it? It is, are they eligible? So essentially that's, are they New Zealand residents or citizens, and are they over 18 and under 65? So if they are eligible, we are ticking the yes box. If they're not, we can tick no, and essentially those options will disappear. From there, we can choose our option. So we have got, so if they're coming to you from elsewhere, they've never been in KiwiSaver before, they've indicated to you that they want to opt out again and continue not being in KiwiSaver, then you've got this option here, not currently a KiwiSaver member. And that's all you would have to do. Click save and carry on. For people who are on a savings holiday, you should have a piece of paper from them from the IRD. Technically, a new employee would have to, reapply potentially, or at least pass on their confirmation from the IRD to you. And you've got an expiry date there that you can add in. Otherwise, if they are completely first job sort of situation and they don't want to be in KiwiSaver, you can use the opt-out form where you say this is, the standard process where after 3 weeks or so, or 2 weeks, they opt out and their contributions come back to them. Otherwise, if they're in KiwiSaver, then we leave it on our make contributions option. And so from there, the employee should have given you another form, either a KS1 or a KS2, depending on if they're new or existing KiwiSaver members. And then that will tell you how much they want to contribute. They would have selected that and signed it off. So this is where you're putting that number in here. And then from there, we are determining whether, so our 3% contribution, is that on top of their annual salary package, or is it part of their total remuneration package? So if it's on top, which is fairly standard, then your contribution would come in here and you would adjust that. So 3% being the minimum. And then if you are a business that, contributes more, then you would put that in here as well. And then if it's through the salary sacrifice, you would put in 0 here and 3% in this box instead. And that sort of covers where it's KiwiSaver is part of your total remuneration package situation. So once we have set that up, again, we're just clicking save in order to move on. So next up is our leave tab. So when we're doing our initial leave setup, we get a slightly different screen to normal. So this is where we can choose whether, so if they're casual at the top here, then you can tick this box and it will pay them 3% of their holiday pay as they go each year. Otherwise, do we have an opening balance? Are we converting from an existing payroll system across to Xero? If we're not, then it's easy. It's just Xero. Or if they're a completely new employee and we're on Xero, then there's no opening balance. Our annual leave. So now, just a quick distinction here. Xero treats holiday pay and annual leave separately. Some systems sort of join them together a little bit. So annual leave is what you have accrued at the end of your last anniversary date, what has rolled over into annual leave. So that's actual holidays earned. Holiday pay is 8% of what you have earned since your last anniversary. So that's the sort of the year we're in, or the 12-month period we're in since your last anniversary will tick up. Okay, and so holiday pay in Xero is recorded as a dollar figure and sits there showing that if they were terminated, they would get this amount of dollars as part of their final pay, right? Versus the annual leave is kept on an hours basis. And so if you terminated and you had an annual leave balance, you would get paid X amount of hours on top of the holiday pay dollars, okay? So again, annual leave opening balance. So if we're a new employee, we have no opening balance. If we're converting across, we need to get a report from our prior system that will have these figures on them. From there, our sick leave entitlement. So our minimum entitlement per the Holidays Act is our 5 days. So where you have people with differing hours, that does become a little bit tricky. But what I would do is if they work, whichever day they work the most hours on, I would multiply that by your 5 days. In this case, I work, I've set up 8 hours a day. So my hours to accrue each year is 40 hours, being that 5 days of work. Now the maximum to accrue, so this will come back to your contract, okay? And obviously this hours to accrue annually will also depend on your contract. You may have more generous terms than just the Standard Holidays Act. Your maximum hours to accrue, so the minimum amount you can put in there is, again, 4 weeks, okay? So that's where you can cap it according to the Holidays Act. So that would be 160. Obviously, if your contract says there's no cap or you can get up to X amount of days, then you would work within that. And just to note that these are hours figures being put in here, not days. So it's just something to be wary of, that Xero deals with most things in hours, versus other systems quite often use days. From there again, we've got that opening balance field. So for new employees, that is 0. Once we've done all that, we can save it and it will convert it across to our standard view. So this is what it will look like if you ever came into an employee to look at their leave dashboard, okay? And so as you go throughout the year, this dollar figure will go up as you post pay runs. As you reach anniversary dates, holidays will roll into this amount. As employees take annual leave, it will go down. Same with sick leave. So what you'll see here in our sick leave is that it's already set to be annually after the first 6 months, okay? So that's all set up, ready to go. After they've worked for you for 6 months, they then get their 5 days, and then every year after that, they get another 5 days. Our annual leave, so you can click into all these things. So the grayed out means it's locked, okay? Because essentially that's based on something else. Now we do have a tick box here saying include leave available to take in advance in the balance. So what that is doing is it is taking this holiday pay dollar figure and converting it over here into hours to sort of tell the employee or yourself that they have accrued this leave by working, but they haven't technically, gotten it yet because they haven't rolled past the anniversary. So when you have this box ticked, I would never let this balance here go into a negative, because what that means is that your employee has taken so much holiday that they've actually not even worked enough yet to have earned that holiday this year, okay? The other thing that it will do is on the payslip, instead of showing them a dollar balance for holiday pay and an annual leave balance, it will only show them the combined annual leave balance. So some people like that there's not a dollar figure of holiday pay sitting there on their pay slip each week, but completely up to you. From here, you can assign new leave types. So where that can come in handy is if people are, say, on bereavement leave or parental leave. There's also the new family violence leave. So if you have that situation, you would come on here, you would assign the leave type to them, and then they'd be able to do a leave request using that leave type. The parental leave can get a bit tricky, so it's best to get in touch with someone there just to get it all sorted and set up properly before they go. You can also do new leave requests from here, but it's probably not the easiest place or the most efficient place to do it, okay? As we move across, our next tab is our bank account tab. So that's where we can set up their bank account that we're paying into, so that when we run either we can run a payment report, it's got the account number on it for us, or if we're going to use a payment file. So say we've got 25 employees, that would take a very long time to have each individual employee going into internet banking, setting up the payment to pay them. A payment file is basically where you can download the data out of the payroll system, upload that file to your bank, and it will pay every employee in one hit, okay? And so obviously we need account numbers and things in here for that to work. Moving along is just going to be a history of our pay slips here. So as you post the pay runs, the pay slips will generate in here automatically. Our pay template. So our pay template is sort of our default pay slip almost, or pay run, our default pay run. So what it's going to do is pull in our 8 hours by 5 days and our rate. So that's our normal weekly pay. But we might have other earnings types. We might be reimbursing them for using their own vehicle, or we might have a deduction for, say, like putting aside for tools or something like that, where they build up a balance in a tool account, and then when they buy a tool on the work account, it goes and offsets that, and stuff like that. There might be allowances, meal allowances, accommodation allowances that are a regular thing that you want to set up in here as default, so that when you go into the pay run, it's all there ready to go. All you have to do is type in the figures, okay? And that's just as simple as clicking, add a new reimbursement. And then in the background, we just need to set up those items. So once we've done that, we just save what we've changed. Our opening balances tab. So for any new employees, this won't be relevant because they're brand new, and it will tell you do not need to enter opening balances. If their start date is set prior to the start date of you using Xero, then you will be prompted to enter opening balances. And again, we'll get that out of your old payroll system. And generally it's the last 12 months, and that's just to help Xero calculate those holiday pay and annual leave figures for when they're being used. Lastly, we've got a notes section, which is just adding notes about employees. So it's not, you can't attach files or anything, but it's just one of those things where, add a note, hey, met with Rory today and discussed pay rise, applicable on this date, something like that, just to keep a record. I would suggest that you'd want better records than that anyway, though. Okay, so that's setting up an employee. Please do fire through any questions you've got on that, and we'll address them at the end. So what I'll do now is take you back here, and we'll add a contractor, and I'll show you the difference here. So a little bit of a different view, okay? So all we need to do is add in our business name. We can put in that contractor's name and their phone number, their email address, and then again their postal address. Once we've done that, we can save. Oops. Oh, okay, we've already got my email in there. So obviously one unique email per person, okay? So that's just something to be wary of there. Once we've saved that, we can come down to our employment information. So that's our start date, okay? When is that contractor started with you? How often you would pay them. So that may be monthly for some contractors that give you, multiple invoices and then you pay them once a month. Or it may be weekly in that they still give you invoices, but you pay them in a weekly pay run. So it's just careful to be wary of the differences there, in that Xero deals with a monthly pay run completely separately to a weekly pay run, but you may still pay your contractor once a month, but just within a weekly pay run. Again, we've got that tracking facility here. So if that contractor works at one location only, we can tag them against that location or whatever category it is that you want to tag them to. Our taxes, so again, it's just our IID number. Our withholding tax code will come through automatically, and then we just need to enter the rate. So the rate will be found on an IR 330C. which is essentially your tax code declaration form for a contractor. 9 times out of 10, it's going to be 20%, but it pays for them to have given you that form or for you to request them to do that form anyway, because there are some rates that are lower and some rates that are higher. Lastly, if they are GST registered, then we can tick our box to say, yes, they're registered for GST. Cool, so all done, can now be done. Again, we've got the pay template for our default setting. We've got our payment information for bank accounts and stuff for our, if we need to do our payment file. And we've got a history there of payslips and notes, okay? Okay, so moving on. So Xero's menu here is essentially how you would look to do your weekly or fortnightly pay run process. So if your employees have the app, then they can do leave requests for when they're sick and for when they're booking holidays. And then your first step when you're about to do a pay run is to then jump in, look at those leave requests, okay, if they've done them. Otherwise, you might have some paperwork from your employee saying, hey, I want to have this day off, or I was sick on that day. And then you can jump in here and do a new leave request. So this is very simple. We just need to pick our person. We need to choose what sort of leave it is, okay? We need to say, okay, a little description, you know, hurt back. From there, we just need to select our dates. So we'll just chuck in tomorrow. It will tell you there the current leave balance. So I actually have no sick leave available to me because I haven't been here 6 months yet. So at that point, it's up to you whether you say, hey, that's cool, we'll pay him sick leave. It will come off the balance when it rolls over. So it's not like you're getting extra or giving them extra, it's just a timing thing there. If it's your annual leave, you probably want to make sure that you're not giving them annual leave in advance of working, unless you get them to sign something on that front. But that's probably slightly out of our area of expertise. So from there, we can approve that. And that's going to come through there saying Rory Hurd is back and was off tomorrow. Our next step there, so once we have gone through and approved or created our leave requests, we're going to move on to our timesheets. Now you don't have to use the timesheet section. If you're not time-based, that makes no sense. You can manually enter the hours or the salaries will automatically appear based on what we've set up in the employee directly in the pay run itself. But if you are one of those businesses that it's sort of time-based and they work X hours, they get paid X amount, then using the timesheet system is fairly useful just to track that. So what I'll do here is we've got our week, 22nd to the 28th of June. And I can see Rory here hasn't created his own timesheet, so I will create one for him. From there, all we need to do is enter our hours. So I've started today, I've worked 8 hours today. Apparently I'm in labour hire. In here you will have, you know, different settings, potentially salary versus ordinary time, okay? So it's just, depends what shows up there. Now Thursday we've plugged in that I'm going to be sick, so we leave that one blank. We would also leave it blank if there was a stat day, okay, or annual leave request. So we only put in the time if we are actually working on that day. So if you have people working on a public holiday, then we do just need to add a 1.5 code for them to put that down to. But otherwise your stat days, your annual leave and sick leave will pull in directly without you having to enter anything here. And then so assuming Friday we're back at work, we can add that in as well. So if your employee has done their timesheet, you will still need to come in here and approve it. So you're checking that what they've put in matches what you're expecting, or you may have other systems that track things as well that you're comparing it to. And then, or otherwise you've created it yourself like we just have. So once we're happy, we can approve that timesheet. If there is something we need to change, we can just easily come back and edit it. So say we put in time on that Thursday and it's doubling up because we've got the leave request, we can just come back, edit it and fix it up. So there's no drama there. Okay, so we've done our leave request, we've done our timesheets. So essentially the last thing we need to do is actually process our pay run. Okay, so this is our pay run screen. So you'll get a few messages here saying like things are simulated because it's a demo company, but also about COVID. Up here is where we are connecting to the IRD for that payday filing. Okay. So you can basically the first time you'll get a banner saying, hey, you need to connect to my IR, please connect. If you've already connected, you may need to change your login details or disconnect and reconnect if something happens to go funny. Doesn't happen very often, but occasionally. But from here, what we want to do is run our pay run. Now, as you can see here, we've got a weekly, a monthly, and unscheduled options in our pay run list. And our dates are a little bit out of whack here. So we're obviously wanting to pay Rory, me, for this week that we're in now. But what's happened here is our pay runs have only been done up till the end of July, 19 even, so that's a year ago. It is really important that these dates here are flowing every single week, and it's the correct week that you're doing the pay run for, or the correct month that you're doing it for. Otherwise, your employees won't tick over their anniversary dates and they won't receive their annual leave and sick leave entitlements, okay? So really important. The unscheduled pay run should only be used if there's been an error and you need to pay someone extra, something's been missed, or there's like a bonus that you want to run outside a normal pay run, but it's still getting paid in that same week. And then there's a few others. This is where around annual leave cash up and stuff like that, where we use an unscheduled pay run. So today I'm going to use an unscheduled pay run just to run the pay to demo it for you. But yeah, just please note that you shouldn't regularly be running unscheduled pay runs. And you should always check what you're about to process the payroll, what date you're about to process a pay run for. So we click our button, and because it's an unscheduled pay run, it's going to give me a few extra options. Just ignore this. If you're picking weekly, it will just take you into the pay run. So you would come straight in here if you're just doing your standard weekly pay run. So from here, you do have the option of a payment date. So again, this is set up in the background as a standard thing that happens automatically, but it may be that occasionally you do have other pay runs that you sort of have done early, and you want to set the payment date out further or something like that. You can add a message to all your pay slips as well, and that will apply to everyone. So from here, what we want to do is we want to tick the people that we're going to pay, and then we're going to click in to Rory here. So our week ending, oh no, I see it hasn't brought through our rate, because we've obviously set that up slightly differently to this labour hire thing. But essentially this little icon out the side here is saying that that's linked to a timesheet. So that 16 hours is linked to a timesheet, and I can click that and it'll flow through. Now where's my sick leave? Isn't showing up, is it? Okay. Let me just check our sick leave. 25th of June, 8 hours. Not sure why that's not showing up. Oh, yeah, right. Did I put it in the employee or the contractor? Okay, good point. Let's see. Yeah, 2 Roy McKenzie's. There we go. We sure do. No, well, it should just be the employee, right? Because the contractor won't have any sick leave at all. Shouldn't be an option. No, it is. It sure is. So our sick leave is coming into our contractor because I've selected the wrong Rory McKenzie. Probably should have called that something else when I set it up to make it easy. So I'll flip back to our employee for now. So essentially we've got 16 hours coming through our timesheet, okay, and we can set our rate. So that's 320. It's automatically calculating our withholding tax, our PAYE. And it is also doing our, so sorry, this is the contractor, right? Yes, Rory's getting confused, sorry about that. So this is our contractor, and so our withholding tax is being calculated at 20%, our GST is being added, and that's all we have, okay, for that contractor. From there, the bottom here, you are getting a net pay, so that's what you would actually pay them. And the total cost to you here at the bottom is a bit higher because obviously we've got withholding tax on top, okay? So we switch to the actual employee. So what's happening here is we've got our sick leave and it automatically adjusts our ordinary time. So our standard week is a 40-hour week. So it's automatically adjusted it for you to account for that sick leave. But then we might say, well, actually he only worked for 2 days because he started on Wednesday, Thursday was sick leave, and then Friday we worked. So that's where if you're not doing a timesheet, you don't get the icon, but you can still manually adjust the hours in here. From there, we have got some pay information. So the number of days paid. So we would say that's 3 days pay. So 2 days work and 1 day sick leave. So you would only put in here, you would only exclude a day here if it was an unpaid day taken. And then the same here for complete weeks of unpaid leave. So it would have to be a whole week that they haven't been paid for in any way, shape or form. And that's just helping Xero with those holiday pay calculations. From there, we've got our PAYE, so we're tax code M, it's all running through. We've got our KiwiSaver coming out, we've got our contribution to the KiwiSaver coming in, we've got the tax on the employer's contribution, and at the bottom here, we've got our leave accruals. So our holiday pay is, 8% of what we've just been paid, accruing down here. And then we can see we've got a balance here of -8 because we've used 8 hours of sick leave when we had 0 balance. So again, at the bottom here, we've got our net pay figure and we've got our total cost as well. So once we've saved it all, let's just update that one again. So once we've gone through each employee and we've saved it, we can then, under our options menu, we can view our pay slips and we can view a pay summary report, or we can post it, okay? So by posting that, it's going to say, hey, once posted, this will automatically go through to the IRD, and that's our payday filing sort of functionality there. So yes, we want to post and file that. And then now under our options, we've got a few more options there. You could email all your pay slips out. You could download them and print them and give them a paper copy, depending on how you operate. If your employees have the Xero app, for Xero Me app, then they will have access to all their pay slips already. So you don't really need to do anything. Again, we've got this pay summary report and a payments report. So I can show you these. So our pay summary is essentially who have we got, who are we paying, what hours are we paying them for, taxes, GST, all that sort of stuff. Okay, there's a summary there. Our payments report is where I'm talking about. You can print this report and it will have their bank account numbers and it will tell you their net pay, how much to pay them. So you can see here, we haven't put account names or numbers in, but this is their net pays that we'll be paying that person. Otherwise, we've got that export payment file option. So that's our payment file we download and then upload to our internet banking, and it pays everyone in one go. Makes it super easy. Now, if we've posted our pay run and we go, oh, hang on, I'm not sure that's right, and you go and check with the employer, they say, no, I work more or less. You can come in and revert the pay run. If you revert the pay run, excuse me, and it's been longer than that half an hour period for the payday filing, then you can still do it. You can revert it, and this, when you post it again, it will just override what's already at the IRD for this period. So it won't double up and it won't error out. It should just override it. Okay. Okay. So our last step here, we've done our leave, we've done our timesheets, we've paid our employees, we've run the pay run. The last thing here is our taxes and filings. So even though payday filing takes care of most of this for us, we do still have to pay the IRD each month. Okay. So for June, where we've got an amount here, that's not due until the 20th of the following month, right? So we still need to have that calendar reminder set in place to say on the 18th, hey, don't forget to do the PAYE or pay the PAYE. This total tax here will just slowly build up each week or each fortnight as you run the pay runs. Click into here, you'll get the breakdown of what it all is made up of. But essentially this figure here is the figure that you would pay at the time. So if we're on the 18th of July, whatever this figure here for June says, that's what we would pay. And you can download a PDF report of this as well if you needed to there. So we've talked about linking it. So you do need a MyIR account with the IRD in order for the payday filing to work. So that's one thing that a lot of people are still not doing. And we really recommend you get signed up to MyIR for your business. So you've got the visibility, you've got the accessibility of doing payday filing. Same with GST returns, you can file them out of Xero. And as long as you've got that MyIR account to link it to, it will all flow. And it's just a nice way to keep on top of your taxes if you do want to look just to make sure you don't owe anything, stuff like that. So really recommend doing that. But otherwise, that is our payroll training. Do we have questions, Lucy?
Yes, we do, Rory. We've got a few, and if you do have any other questions, please fire them through now. Yeah, we've got about 10 minutes left of the webinar, so we're happy to take questions and help you guys out. So Rory, first question, is annual leave still calculated while a staff member is on parental leave?
Yeah, so that's essentially the tricky one. So yes, they still accrue the annual leave, but it's not worth anything. So it's the only instance where your annual leave is essentially worth less and the calculation is different. So your standard annual leave calculation basically looks at what's the average pay, daily pay of the last 12 months and what's your current rate. Whichever is higher, that's what you'll get paid for your annual leave. However, if you've been off on parental leave, then it only takes that average. So if you've been off for 12 months, you've taken the full 12 months, then on day one back at work, your holidays are essentially worth nothing, okay? Because your average over the last 12 months was 0. If you've taken 6 months, then it'll be worth about half. Yeah. So it's an interesting one. It's the only time that that happens, really.
Awesome. Thanks, Rory. We've got a few more questions and a couple more coming in now, so thanks, guys. Another question we've got here is, I've only just moved over to Xero. I only have one employee. Can I just keep paying my employer using internet banking, but use Xero for payslips and leave balances? Or do I need to run the payment through Xero also?
No, that's perfectly fine. Yep. So you just run the pay run. And then if you've got an AP or something like that, set up an internet banking, then that would work fine as well. Yeah, you just leave the AP in place, assuming obviously it matches the net pay out of Xero. You would just leave it as is. Yeah, there's no need to change too much there, other than you just are doing the PAYE and stuff through here instead.
Cool, thank you. Another question. Oh, this might be more of a demonstration. We might have to come back to this one off the webinar, but would you mind showing us how you would add the time and a half payment when paying employees for working on a stat day?
Yep, no worries. So in our settings area, this is where we set up the payroll settings. So you've got a payroll settings option. So we would come in and do most of this when we turn on payroll for you. So we'd jump in, you've got where are the wages being paid from for that payment file, you know, which wage expense account are we pointing things to, and then we also set up a PAYE and a wages payable account. We've got the employer IID number, we've got size, generally it's small, and then we would also set a starting date here as well. And we can also select whether we're doing tracking on either groups or timesheets. Okay. We also set up our calendar here, so our pay calendars get set up here. The holidays we don't really touch at all because it's all standard in New Zealand, so they will come through automatically. But our pay items is where we can set up any sort of customized pay items. So under our earnings tab, we would add an other earnings type, and we would call that time and a half. From there, we can select a multiple of the regular earnings. You do also have fixed or rate, and then we would say it's 1.5 times. And then again, our expense account would just be the same as our wages account that we've already set. And you can see down here, most of everywhere else is set to the same code. And you just add it. That would then be an option for them to pick in their timesheet or for you to process their time in as well. Okay. Does that answer that question, hopefully?
Hopefully. Hey, I just see a few of you are dropping off as well. We've got a number of questions coming through, so we'll continue to answer those. But if you do need to go, I just want to quickly say thanks for joining us today. And I will be sending around a short survey right after this email. And we'd really appreciate if you could just take a minute or two to fill that out. It really helps us to understand how this has landed for you today and how we can continue to add support. So thanks, guys, if you do need to run, but we'll carry on with the questions. Rory, next one. Up until now, my bookkeeper has sent me invoices each month and I add it to bills and then pay them. I didn't know I could put it into contractor pay run. Is it important to do this, or can I continue as is?
So it depends if you're withholding the 20% or the percent of tax and paying that as like a PAYE thing. So some contractors, generally if they're companies, you don't have to. There are a couple of situations where you still do, but generally a company is outside the withholding tax rules. But if they're a sole trader or if they're one of a couple of specific industries, then they do get caught. And so that's the risk thing there, right? So if the ID catch up and find out, hey, these guys aren't returning any tax, you know, at all, and they come at you saying, well, hey, you're supposed to have withheld 20% of their tax. And so then it's a thing where the idea coming after you to basically pay that tax versus, and then you're trying to essentially get that back out of the contractor. So it's really just a risk management thing there, where they don't fit under an exclusion, then we should be withholding that 20% or so and returning it. But yeah, as I say, if they're a company, they're generally outside those rules.
Cool, thanks. A question around the pay slips. A query around, could we not show the year-to-date figures within the pay slips?
Yes, I haven't looked at one for a long time, to be honest, but I'm pretty sure there should be year-to-date figures in the pay slips. Just trying to think of where I can actually see one that's going to have some information in it. Because I'm pretty sure that, see what we've got in here. Download that as a PDF. Yeah, so there is a year-to-date column on the payslip. So that will be shown. So when you're using the app and you look at a payslip, it downloads a PDF. So you'll get this sort of view, and it will show that year-to-date thing. And if you're emailing payslips or printing them, it'll essentially be this that the employees receive. So yeah, there's definitely a year-to-date section on each payslip. Yep.
Great, thanks. And a few more questions here. Do you still accrue annual leave on ACC?
Yeah, I would assume so. Yeah, unless you can medically retire people, they will continue to get their annual entitlements regardless of if they are working or not. So that's where that distinction between holiday pay and annual leave, and then that annual leave calculation comes in. So holiday pay might be 0, but if they tick over the anniversary, they get given, 20 days of holidays, and then the calculation is the higher of the average of the last 12 months or their daily pay, their normal standard pay. And so if their normal rate as per their contract is $20 an hour, and they haven't actually worked because they've been on ACC, they still get their entitlement, and then they still get paid at that higher rate of their $20 per hour. So yeah, that's definitely something to be wary of if people are on like long-term ACC and it doesn't look like they're coming back. It would pay to get in touch with a HR consultant or something like that, just to discuss your options around that. Because yeah, I have heard stories of people falling through the cracks in big companies, being on ACC, or heaven forbid cancer or stuff like that, where they've still been employed by that person. They've been given that huge extended break, and it just hasn't happened that they've come back. And then when they go to terminate, there's a massive holiday pay liability that in some cases I have seen has been years of holidays where they haven't actually worked at all. But yeah, they are entitled to be paid that amount. So you do have to be a little bit on to managing those situations. Yeah.
Yeah, thanks, Rory. And I mean, I think if you do need to touch base with an HR consultant, we do have a couple of contacts we can pass you on to as well. So
yeah, definitely.
Just let us know after the webinar, and we'll be happy to sort of introduce you. Okay, carrying on. I've got a couple in the chat here. Does payroll apply for contractors based globally?
Yeah, so there's probably some different rules that we would need to look at for overseas contractors. And that comes back to, so overseas entertainers have different rules, and they're generally captured unless they're exempted from a double tax agreement with another country. Other contractors, it can depend on how long they're in the country for. So there's sort of different rules for that, and it would be a specific situation and looking at those facts. So sometimes yes, and sometimes exclusions apply. Yeah.
Awesome. We'll just quickly try roll through these last couple. Should the first date of employment or the 14th date of employment be used for KS opt-out date?
So I think technically you can't opt out until you've been employed for 2 weeks. But if they're 100% they're not going to be in it, I would probably just look at that not a KiwiSaver member option instead, rather than deducting it, paying it to the IRD, then 2 weeks later it coming back, you know. It's just one of those things that's about practicality more so than potentially the 100% following the dotted line for the IRD, you know.
Cool. Two more here. We currently run a payroll system separate to Xero with all our financials recorded through Xero. Our financial year runs from July to June each year, but our current payroll system runs April to March. Is that a problem?
I wouldn't have thought so, because your payroll system should more be on a week to week or a fortnight to fortnight sort of basis. So it doesn't really matter so much. And then also your employees' tax year will be the 31st of March, right? So all the reports you need or you know, potentially that your employees are requesting are going to be for that April to March period. So I wouldn't think that's really an issue. It's just because, yeah, your employees have that year-end date of March, which is different to your business. But for your business purposes, the week-to-week thing, it will still all reconcile up back to what is expected at the IRD. So there shouldn't be any issues there.
Thanks, Roy. And just lastly, can pay runs include 2 weekly?
Yes, so 2 weekly rather than fortnightly. Let's have a quick look see. Not sure off the top of my head, but easy to find out there. Let's have a look. Yeah, so these are our options here. Weekly, fortnightly, half monthly. So I'm guessing that's twice a month more so than fortnightly. So weekly being 52 pay periods, fortnightly 26. I'm guessing half monthly would be 24. 4 weekly, and then obviously monthly. So slight distinctions there. So it doesn't look like we've quite got 2 weekly is essentially fortnightly, but if you're thinking 2 times a month, you would have half monthly there, would sort of work there. Yeah.
Awesome, thanks, Rory. There is one more question here, but I think we'll come back. We'll answer that question directly. It's a little bit, it's not exactly payroll focused, so we'll get in touch with that person directly to help you out. I'm aware we're a couple minutes over midday, so I think we should wrap up there. I just want to say a huge thanks for all coming along. As I mentioned, I will be sending a survey out, and we really appreciate your feedback. It really helps us to plan for our next webinars and how we can continue to add support. Was there any last things from you, Rory?
No, that's all good. Thanks for coming, everyone. Hopefully you got something out of it. And obviously let us know if you do need help either converting or getting set up. We can help you out.
Awesome. Thanks, guys. Cheers.